Hi, and welcome to part 1 of our tax deduction series. If you're one of the millions of small business owners working from home, then you might be eligible for some serious tax breaks. Stick around until the end, and I'll give you 3 tips to maximize your tax savings. Before we get started, please remember tax laws can change. It's always a good idea to work with a tax professional for personalized advice. By understanding these tax deductions, you could potentially save a lot of money on your taxes. So let's start with some basics. What qualifies as a home office? Not every home workspace is going to qualify for the home office deduction. To qualify, your home office must meet 2 criteria. First, it needs to be regularly and exclusively used for business. That means it can't just be your bedroom where you've got a desk set up that you do your work from. When I worked from home, sometimes I would sit down on my couch and I would from there. That doesn't mean that my living room would have counted as a home office for deduction purposes. It needs to be regularly used and exclusively used for that. From home, I also had an office set up upstairs that was just for work purposes. That counted as a home office deduction. And secondly, it needs to be your principal place of business. So if you have an office, say in an office building where you do work most of the time, but then you work from home a couple days a week, that doesn't mean that your home office is going to qualify. Even if it's set aside specifically just for work, it's not going to count. Now the good thing is you might be surprised at what will count as a home office. So obviously a house, but apartments, condos, mobile homes, if you live off of a boat, even a boat can count as a home office. Other structures on your property, like your garage, if you have a barn, maybe a she shed that you do your work out of, those can all qualify for the home office deduction as long as that's your primary place of work and that's exclusively what you use. What does not count are things like any part of your property that you use for hotel, motel, Airbnb, or similar. So if you've got a farmstead and you have a little bed and breakfast building, you have guests come and stay, that's not going to count for home office deduction. If you've got a loft over your garage that you rent out, that's not going to count as a home office deduction. So we've covered the what, as in what qualifies for a home office. Now let's talk about who can qualify for this deduction. Not everyone is going to qualify for the home office deduction, even if your property meets the criteria we've already talked about. But there is some good news. First of all, the home office deduction is available to both homeowners and renters, so you don't have to own the home in order to get a deduction. But you must be the business owner. Employees are not eligible. And again, as we discussed, the home must be your primary place of work. Or it can be where you do all of your administrative or management work if you don't have anywhere else to do them. So this would be a situation where, say, a real estate agent, most of their work may be done, going to the different properties that they're helping sell for clients. But if they do all of their administrative and managerial work from an upstairs office in their home, then they could qualify. Another example of this would be someone who does contracting work where you're going to different job sites and you do all of your managerial work or administrative work from home and you don't have any other office somewhere else that you could be doing that. That would also qualify. So how is the deduction calculated? Well, there are 2 different ways to calculate this. One is a standard deduction and another is a more detailed deduction. The standard deduction is a simple math equation. You take the square footage of your home office and you multiply that by a set rate. This option is pretty simple and straightforward to do, but it might not maximize your deduction. The second option is the detailed deduction. This is a more complex deduction, but it has the potential to give you a much larger deduction. This is where you itemize your expenses like your rent or utilities, insurance, and depreciation. And then you calculate that based on a formula to get your total deduction. I will leave a link down in the description below to the IRS website that lays out how all of this is calculated in detail. So let's talk about some of the common deductible expenses that make up that detailed deduction. The first and most obvious is going to be your mortgage interest and or rent. So this is going to be based off of your office's square footage compared to the overall square footage of your home. Let's just take, for example, you have a 10 by 10 office, so 100 square feet, and your house is 2,000 square feet. 100 square feet is 5% of your 2,000 square foot home, so that means you would be able to deduct 5% of your interest or 5% of your rent as part of this home office deduction. Next, utilities. So things like electricity, gas, or internet. Also home insurance, again based on your office space. Depreciation or decline in the value of your home office equipment. And then also repairs or maintenance. So that would be directly related to your home office. So if you're claiming a home office deduction and your office is an upstairs spare bedroom that you've converted to an office, and your garage door breaks, repairing the garage door doesn't count towards that deduction. On the other hand, let's say that you have electrical problems in the outlets in your home office. Those repairs could be deductible. So now let's talk about 3 important tips to maximize your tax deduction. First, you want to make sure that you keep accurate record. Keep detailed records of all of your home office expenses, including, as we mentioned before, if there needs to be repairs done. Make sure that you get an itemized bill that dictates how much the repairs were done in the office space itself. Next, if possible, you want to make sure that your home office is in a separate space. So use a separate room of your house. That way it's very clear which part is your home office and which part is not. And third, if you want to claim home office tax deductions, you need to be working with a tax professional. They can help you understand how much of a deduction you may or may not qualify for and make sure that your deduction is filed properly. If you're a small business owner trying to maximize your tax deduction, check out this video next.